This is Business Talk, your business, your success. Sponsored by Take Action Business Coaching. The opinions expressed are those of the participants and may not be the views of the staff, advertisers, and owners of the station. Advice given is not intended to replace that of your business advisor. Now, let's get down to talking about your business, your success. This is Business Talk.
Well, good afternoon, and I'm here today with Tim Cistone from Bottom Line.
Bottom Line CPA.
Thanks for having me, Pete. Yes, thank you for coming. And Tim is our CPA and accountant and business advisor and helps us with a variety of things, and some of them about taxes and some of them about saving and other types of things. So I'm glad you're here today.
Great. Thank you
Thanks
for having
for coming.
Absolutely.
Yeah. So Peg and I usually do the show together, and we're business coaches, and we work with a variety of companies around the state and actually around the U.S. We've got one in Alaska, one in Maryland, one in Texas, one in Michigan, or Michigan, I should say, because of the big game coming up. And we work with individual business owners to help them grow their firms. We also do some executive coaching for larger companies like the Scott's Company and some others around the state, and help them to grow their companies. And there are always questions about how do I prepare for my retirement? How do I make sure I can pass my business on to my heirs or maybe sell it for the highest price possible? And I'm sure we're going to get into a lot of interesting things with Tim here talking about what business owners need to avoid and what business owners need to actually be focused on doing. So some watch outs and things that they can do, take action to be able to help them to grow their companies.
Sure, and absolutely. And tax planning is one big key element in order to boost that bottom line as well.
I'm sure.
Which is sort of our bread and butter, Bottom Line CPA.
Okay, great.
Yep.
Well, one of the things we like to do in the beginning is to start out with some good news, and we get a lot of negative news, right? We turn on the radio, turn on the TV, and sometimes even looking at the paper, there's a big headlines of earthquakes and all kinds of things going on. Well, we like to look around for some good news, and one of these things I pulled out of the Wall Street Journal is an article about apprenticeships, and there's a Labor Department task force that's just been announced that they're going to help businesses to make it easier to provide apprenticeships to people. And we think this is a really good idea from our perspective. It is very difficult to find young people who have some mechanical ability, who want to get into a manufacturing type environment. It's just difficult to fill those jobs quickly. And anything we can do to help businesses to train people from the ground up is a good thing, even if they're college grads and they have an apprenticeship. And a lot of the skills that we got as teenagers, they're just, people don't do those kind of things anymore. Sure. And we want to encourage companies to think about the entry-level positions that they have and what kind of things could they do to actually build a training program within their own company.
Sure, I agree. My firm specifically, we like to reach out to the universities, anybody and that's specializing in some sort of accounting degree. We'd like to bring them in and give them opportunity to sort of see what how an accounting firm works. I think one of the I wouldn't say downfalls, but when I was in college, I didn't do any type of apprenticeship. I left college with an accounting degree. I did pretty good with the. I don't want to boast, but I got some good acclamations on my degree from Franklin University. There's my plug. Great college. Awesome. But I had no experience in an accounting firm.
Sure.
So I had the knowledge. I thought I was ready. And boy, it was a learning experience the first couple of years. And I could have really used some of that on-site training. Just seeing how the day-to-day works. How to work with the clients, certain activities, because a lot of the situations that you deal with in an accounting firm, a lot of them are not textbooks. The scenarios we work in textbooks are different than what you see in real life, and how do you prepare for that? And it is a little bit of experience. So, and I can probably apply that to any industry. To have that apprenticeship, having someone come in and understand how your profession works, I think is a benefit for both the employer. From number one, a cost standpoint, and then potentially bring in an all-star, and then from the employee, who can have that experience up front.
And you know a little bit about what you're getting into.
Absolutely.
I was lucky enough in college to actually, I got my undergrad degree was in chemical engineering, and I spent 3 summers working in chemical plants. One as a welder's helper, which I didn't get a whole lot of direct experience there, but at least I saw what a chemical plant looked like. And then I worked in a laboratory, in a research lab at a chemical business, Occidental Petroleum, and who I later worked for years later. And then I worked out in the plant, in the pipe shop, which they're really interesting, in a very large chemical complex. And it was really interesting stuff. But you had to watch what you're doing because it was very heavily unionized, and you had to be real careful. But it was a great experience. At least I knew what the inside of a factory looked like before I walked into one. I've got a little bit more good news here, and there are a couple of articles here about SpaceX, about Elon Musk's company, his SpaceX company, and they're launching rockets, and they're supposed to be increasing the pace to launch as many as 30 ships next year, so almost 3 a month. And all this is happening down in Florida, so there's a lot of very high-tech stuff going on. And the next article, it's the same company, and it's this gentleman, Musk, who's talking about getting to Mars by 2024. So he set a goal. Now, who knows if he's going to make it? We don't know for sure, but he might only miss it by a couple years. You know,
boy, when it comes to that, when it comes to that technology, boy, that's over my head.
But, it's unbelievable, and they're reusing these ships. They're bringing them back and recovering them, having them land back on land instead of what we used to do is they ended up in the ocean and most of it was thrown away. Well, since they've been reusing them, it's saving millions of dollars per shot, and it's just huge, and it's all happening in the U.S., which is really good. The other thing I pulled out of the Wall Street Journal here is it says global investors are bullish on New York. So New York City, you think, oh, it doesn't really matter. Well, you know, it's still the financial capital of the world, as far as I can tell, and they are building buildings like it's going out of style. And they've got a picture here of 50 Hudson Yards is going to be the project's tallest tower. But real estate prices in New York City are continuing to go up, and there's some very, very large projects. They're going to do there's $3.8 billion worth of financing for Hudson Yards. So that's quite a few buildings, I imagine. You know?
Yeah, because New York property wasn't expensive enough. They thought they'd increase the price.
Right, there you go. So your rent will be $6,000 a month for a one-bedroom flat. Right?
Boy, oh boy, yeah. You better find 7 roommates.
Alan, you ready? All right. So anyway, that's our good news for the day. So let's talk a little bit about to our business audience. Now, this is primarily business owners that we're focused on, is helping them to grow. What are some things that with October being almost over, what do you think they should be thinking about towards the end of the year? They've got 2 months left. Is there anything that they should be thinking about as we approach the end of the year?
Absolutely. Now, I'm sure as you small business owners know that we just went through an extended tax deadline, and maybe you are on top of it and you fall on the deadline, but for whatever reason, we're past our official tax season deadline, which was in October, and now we're thinking about year-end for our small businesses.
October 15th, right?
Yeah, and I refer to individuals, even though the small businesses, a lot of small businesses are pass-through entities, so technically, even though you are a small business, you're paying the tax at the individual level.
On your personal return.
That is correct. So when you're thinking of taxes, you're thinking of your individual taxes. Okay. So how do you bring that down? Well, there's a number of ways you can do it. You have a small business, and you need to invest in certain items that would help your business grow. Certain pieces of equipment, furniture, anything that you need in order to make your business more profitable. In the end.
Vehicles are a common one.
Absolutely. And there are major tax benefits for certain types of equipment where you can actually deduct all of it at once. Now, normally they say you can depreciate.
Is there a dollar amount?
Well, starting in 2017, that dollar amount's up to $510,000 of qualified
so I could
equipment.
buy a really nice vehicle.
You can buy it, yes.
Right, Alan?
You can buy a lot of vehicles.
Cool.
And I sort of hesitate on vehicles because there are some limitations with vehicles. But if you're buying a couple $100,000 piece of equipment, it is reasonable to say, as long as your financials fall in line, you could deduct all that at once. And now, of course, there's always a limitation. So don't take that to the bank. I always say refer to your tax accountant as far as detail. Every information for each business differently.
Yeah, but one of our clients last year did this near the end of the year down in Dallas. And in his vehicle, he bought a truck. It was a $100,000 vehicle, so a nice big diesel flatbed truck that tilted so you could pull the equipment up onto it and that type of thing. But we ran the numbers on it. Without any tax breaks, he was going to earn money on it because he was paying someone else multiple times a year to move equipment. Yeah, and he had the people there with a commercial driver's license and that kind of thing, so it made a lot of sense to him without the tax benefits. Sure. And that's how I like to look at it first. If it's a good thing to do from a business standpoint without tax benefits, great. Mm-hmm. If you get tax benefits with it, fantastic. Right. That's even better.
Yeah, you're absolutely right. We can't be blinded by the fact that just because it's a tax break is the best decision for you.
Yeah, we don't have people buying toys. Right?
That's correct. It doesn't make sense to spend $1 and get 40 cents back for something you don't need.
Right. So the Lamborghini.
Yes, and maybe somebody needs a Lamborghini, but
In quotes, that's in quotes.
But yeah, I mean, if it is something that the business does need, and it's something that that would benefit the business, yeah, absolutely. Take advantage of that depreciation deduction because it helps your bottom line and it helps you on taxes.
Okay, fantastic. So if it's something that's going to help you keep clients or get clients, that'd be the best investment of all.
There you go.
And if it's something that's going to reduce your operating expenses, in some cases our business owners keep track of maintenance on pieces of equipment. When maintenance costs tend to get higher and higher and higher every year on a piece of equipment, then maybe a good time to start thinking about buying a new one.
There's always
whether
a strategy.
it's machinery in the factory or if it's a truck or something like that, is figuring out what's the annual cost, and it may actually be cheaper with the tax deductions to buy new.
Sure thing. I agree with that 100%.
To learn more about today's topic, call 614-306-7922. Now, back to more business talk.
Now, we're talking today with Tim Cistone from Bottom Line CPA. And you're in Dublin, Ohio. Beautiful Dublin, Ohio.
We're in beautiful, historic Dublin, Ohio.
Historic
that is right.
Dublin, Ohio.
That's right.
That's right. So right on Main and...
it's there on High Street.
High Street.
Right.
Okay.
If you see the development going on in Dublin,
Very,
which is a
very
little bit
big
going on,
development, yeah.
We're right across
on the river
from
side,
it.
right?
Yep. And if you move to that big development, there's going to be a nice bridge. You're going to walk across the river to our side of town. So we welcome you to visit historic Dublin
there'll be a
anytime.
pedestrian bridge?
Yes, that is
going
under construction.
Across High Street.
That is correct.
I'll be darned.
So High Street and Riverside will be connected with it's unbelievable developments going out there. So I'm very happy to be part of it, and we look forward to the developments going on. Yeah,
great. And again, this is a business talk, and we've been talking to Tim here about what businesses can do when you near the end of the year, and we've got a little time left. We still have a couple of months, and what are some things that we could do to reduce our tax burden? And one of the things that I know most people are aware that we've got this potential tax legislation that is going to be voted on. We hope soon. And personally, we think the size and the scope of the federal government is something that's very important to minimize as much as possible, and because it reduces our productivity and it reduces our standard of living if it gets too big.
Sure, absolutely.
And if we can keep more of the funds in individual citizens' hands, we're all going to have a higher standard of living.
Sure thing. And anyone who has access to any media device knows that there's a tax reform.
Right. They're talking about it.
You're talking about it. And as a matter of fact, I believe the Senate passed the budget back in last Thursday, and now it's in the House's hands. And once that budget passes, it's a big step towards this being a reality.
Okay.
I've been in this profession long enough not to keep my hopes up, but I do need to prepare my clients and say, hey, look, this could be a game changer with your taxes. And one of the big focuses on this tax reform are small businesses and tax rates.
Okay.
As I mentioned before, a lot of small businesses, the business does not pay the tax, the individual income tax from a federal standpoint. It flows through to their individual.
Okay.
So one of the proposals is reducing.
So you end up paying it anyway.
You're paying it anyway. That's right. And they're reducing the complexity. Right now there's 7 tax brackets that
seven.
There's 7, and they want to bring it down to 3. And the top bracket will drop at least 5%.
Okay.
So anyone who is, and usually that top percent is about 450 or above, and that's all income out the door. You're usually in that top 39.640% bracket. Well, that will come down substantially.
Okay.
One thing that's also brought out is a top 25% tax rate for pass-through income. So, for instance, people know about capital gains. They sell their stock. If they've held it for more than a year, they pay it. They don't pay their ordinary tax rate. They pay a flat 15 lower percent
15%?
tax. Correct,
Okay.
15%.
Okay.
They're applying that same philosophy to pass through K-1 income. Now, it's not going to be 15%. I believe that was the initial proposal. But I think at this time it's going to be 25%, which is good for those people who are trying to reinvest money back into their business. Rather than pay it to the IRS, they can pay it to buy equipment or invest in new employees.
Okay, good.
And so this is definitely at least I feel this is a pro-business, small business type of legislation that could go through.
And generally, at least from what I read, is that 60% of the new jobs in the U.S. are created by small to mid-sized businesses.
I thought it was bigger than that. You're absolutely right.
Not the big corporations, but
you're absolutely
smaller
right.
companies
and
jobs.
And I see these small business owners every day, and most of them want to grow their business. They want to invest in people. It's any advantage they can get financially is a benefit to them, and if that means less money coming out of their pocket going to Uncle Sam and going back into their business, that's a preferred method of them moving forward.
What about if you've got a C corporation, as we do? Sure. What happens to the tax rates on a C corporation?
Now, C corporation is a different animal than the pass-through that we're talking before. C corporation is its own living animal. It pays its own taxes and has its own tax bracket, and that was also addressed in the tax reform.
It's treated as a person.
That's correct. Yeah. So they're looking to reduce the corporate tax rate to 20%, which. Right now, the corporate tax rate's up in the 35, 30, I don't remember top of my head, but it's much higher than that. So this legislation is looking to also benefit the corporation. They call
it's a big drop, but a lot of corporations, because they have the expertise and the ability to do it, they may pay a lower effective tax rate than 35.
That's correct.
But it'll certainly be higher than this new 20%.
Absolutely.
Right?
No, absolutely. And this corporate tax rate's looking to, and that's where,
there might be some negotiation going on, right? So it may not end up at 20.
What we see right now is a moving target, and of course it gets the legislation gets constantly reconciled, and through that process, it'll eventually end with its final product, which I don't see it being. It might be close to the way I've described it, 25% pass-through, 10%, but there might be a few things added to it, subtracted. Also touched on the tax reform is for any individual. They're looking to eliminate some of the deductions you can take advantage of, state and local tax, real estate taxes, and double your standard deduction, which might mean a lot of people might not need to deal with itemized deductions to reduce their taxes.
Simpler is better,
correct.
At least from my point of view. The simpler the regulation, the simpler the process, the fewer the number of tax rates.
Right. So
simpler is better.
Rather than pull the receipts and figure out how much did you pay into taxes, how much did you pay into this deduction, and on your tax return, just plug a number. That number might be $24,000. I don't know what the number's going to be, but I heard that number for a joint couple.
Okay.
And unless if you have personal deductions above that, it makes your tax. You just plug that number and go on with your return. It really does simplify the return.
What did you make last year? What do you have left? Send that. That's a little joke, a little accounting joke. Yeah. Don't actually do that anymore.
Right. I do see some benefits from tax reform. Now, I can't go into the economic and political side of this tax reform. Where are they going to get the money? Well, let's let them iron it out. And of course, I would hope they would be very cautious as far as whenever they take from somewhere, they have to, or wherever they add somewhere, they take from somewhere else. And
well, the thing that I like to remind people of when we're talking about this, and this is for our own clients, and our clients are very interested in this to see what happens, is that the last 10 years or so, we've averaged 1.8 to 1.9% growth, economic growth. If we get to 3%, let's say we add 1%, it could add $2.5 trillion to the economy overall. We're at $17 trillion right now, roughly, between 17 and 18, somewhere in that ballpark. And if we add $2.5 trillion to the economy, there will be plenty of tax receipts coming in.
Right.
And that's what happened before. Kennedy did it. Reagan did it. We've done little ones other than those two.
Sure.
Small things.
Yeah, nothing this big.
But large things have happened a couple times, and it really has helped the economy grow dramatically.
Mm-hmm. And
usually higher than 3%. But if we get to 3% for 3, 4, 5 years, it'll be huge.
No one understands that the smallest percentage means so much of a change. And I believe you're referring to the tax change in, what was it, 86, I believe. That was the next tax overhaul.
Last big one,
which
30 years ago.
That was, big one. And sort of concerns me because it took Reagan 8 years to get that through. Trump thinks he can get his done in one.
He's not very patient.
No,
I'll give him that.
That's what I hear. And but the funny thing to mention on the 86, they brought in the alternative minimum tax. I don't know that some people know what that is. It's sort of a thorn in people's side, of which this new tax reform is talking about eliminating that.
Okay.
Which, again, it sort of adds to the additional simplifying the tax return.
Right.
So a lot of positives on that. Again, what are they going to eliminate to bring these benefits in? only
Right.
time will tell. And right now, the House and the Senate, they're poking holes through this to make sure
Of
everyone's
course they will.
happy.
Right. How will this help me get reelected? That's the primary concern, right?
Yeah, well, everyone has their own motivation.
Yeah, so we'll see. But anyway, we think it would be good for our clients and our clients' employees, and they'll be hiring more as a result.
Absolutely. You put more money in their pocket, that's more opportunity than to hire more people.
Right.
I believe
And,
that.
man, encouraging them to replace their outdated equipment and buy new vehicles, that's all good for the economy as well.
Anything to bring value.
So,
Yep.
the other thing that I've sent people to this before, if anybody is interested, John Kennedy gave a speech in, I think it was 1962, to the Economic Club of New York City. And it's a little grainy. It sounds strange, but you can Google it and get online and listen to this. And it is dramatic. Mm-hmm. The way this gentleman was talking about reducing the burden on business owners to grow the economy. And he doesn't sound like a Democrat, but he is very much in favor of growing the economy to help everybody. It's just really, it's funny how we think things have changed a lot. Well, they haven't changed. And he was very much for reducing the burden on businesses to be able to allow them to invest in this country and grow.
Yeah, I believe everyone believes that. I think regardless of what your political affiliation is, I believe everyone believes that more money in the small business pocket is going to make it more beneficial to more people.
Right.
So, again, the small business has money. They can invest in equipment. They can invest in people, most importantly. And then not to mention, as you grow your business, your revenues go up. You're paying more tax dollars, which goes to the streets. I mean, it compounds in a positive way. Uh-huh. But, again, I think where the divider is where's that money coming from?
Right.
In order for these businesses to benefit from tax breaks, we have to take away from certain spending programs, and that's where the separation starts. I believe everyone thinks. I don't want to speak for everyone, but I think small business owners are well intentioned, and all they want to do is do the right thing, build an honest business that will help people,
help their employees,
and help their employees, and any advantage works. And I think everyone believes that supporting the small business owner. I don't think there's anything wrong with that. It's just a challenge to get there, and there's hurdles, and how do you get there is the issue.
Well, it'll be fascinating to see what happens over the next few weeks.
Very. I'm tuning in.
All right, so we're going back to the end of the year. Is there anything that you think all the business owners that are listening now should think about? We mentioned capital equipment. If there's something you've been thinking about replacing, or a vehicle or something,
sure,
that's one. That's a relatively easy one.
Absolutely, and unfortunately, one of the biggest challenges is the timing of this potential tax reform. So let's say let's say it kicks in 2018. Let's say that happens.
Okay.
And, well, that means our tax rates are going to substantially drop in 18. Now we got to think, okay, well, we're paying higher taxes in 17. Maybe we should take advantage of deductions in 17 that we would normally pay in early 18.
Yeah.
Because every dollar you're paying a higher tax rate than you would in 18.
But if they lower it so much that it's better to wait, maybe I should wait.
Well, I'm talking about spending. Yeah, that's true.
Oh.
That's true. Okay. But yeah, I mean, and we do have that. We're always on that teeter-totter because usually when a law passes, sometimes they'll do it retroactively.
Right. That's right. We've read about that too.
Yep. And
they may go into maybe cover 17 as well.
And that it's just the unknown
because we don't do our taxes until first quarter.
That's right. That's
usually.
Right. And by that time, you already know. But the timing on when you spend the dollar is very important, or for a certain expense. If you can hold off, to the next year, if the tax break is going to be higher.
Well, and most of you out there should have a list of capital projects that you would do in your business if you could.
That's correct.
So you should always have a prioritized list on hand.
You should always have a plan at least 1 year out that I'm sure Pete can talk to specifically.
Could your business use some help? Call 614-306-7922 to schedule your coaching session. 614-306-7922. Now, here's more business talk.
Now, we're talking today with Tim Cistone from Bottom Line CPA here in Dublin, Ohio, in beautiful, historic Dublin,
Thank
Ohio.
You. Yes.
And Tim is our CPA, and we actually remind you guys that we do have a 90-day planning session on December 8th, which is always a Friday. And, Tim, you've been to these before, and basically what we do is take a group of business owners through a process to develop a plan for the following quarter. So it'll be the first quarter of 2018. Everybody will come up with their own plan. In a lot of cases, we have business owners bring their management team with them. Some people come as individuals, so it really is up to you. But if somebody's interested in that, give me a call at 614-306-7922. We've got a couple of spots available that we could give you seats to come. And you learn from the coaches in the room, but you also learn from the business owners that you're sitting with. And you've all got similar struggles no matter what kind of business you have. You have employees, you have customers, you have contractors, you've got things going on that are challenging. And when you're with other people that have similar challenges, it just seems to make things go a little better.
Sure. Had a great time. High energy, great positive message. It's a wonderful time.
Great. Well, I'm glad you enjoyed it. And I'm actually not going to be there, so you'll have an even better time. I will be in Thailand. It's my oldest son, Ben. He likes to eat, all kinds of great food, and he lives in Chicago and likes to go out to dinner and things like that. And anyway, a couple months ago, I was in Chicago for the weekend, and he said, well, I'm going to Thailand. My girlfriend can't go. Do you want to go? Let's go. I'm like, okay, fine, And
you jump on that.
Yeah,
absolutely.
so I'm going. We'll let you know how it goes. So we're going to stay in Bangkok for a couple of days, and then we're taking some rickety train up into the jungle to the north a few hours. So yeah, I may not come back, but I'm going there, and I'm going to have some monkey brains and scorpions, and he's teasing me about eating all this strange stuff. So I know they have chicken and pork and stuff too.
So your son's leaving Chicago for good food? I don't understand that.
Well,
Chicago,
they have that
food.
all the time. Every time I go
Yep.
there, we never go to the same restaurant.
No,
And,
I love Chicago.
It's a great place to eat.
Oh, you're not kidding me.
But we'll have a show about Thai food and all that. It'll be fun.
Wonderful.
Yeah. So one of the things that we haven't talked about yet is I'm a business owner. I've run this thing for 20 years. What should I be doing with respect to retirement plans, or even we could talk about succession too, but just about saving for retirement? I know there are financial benefits. There are things that the government does to help us, to encourage us to put money into SEPs or IRAs or whatever it happens to 401ks. What is it that you think the business owners should be thinking about? And they've got a little time now. It's not the end of the year yet. Plus, you have until you file next year's tax or this year's tax return. Right, so you have a few months really to prepare.
That's good, and that's the beauty of it. Now, as far as the specific retirement plans itself and portfolios, I'm very careful as far as telling people I do not do retirement plans or anything like that. But boy, I have some good resources for it.
Right.
Because there is a correlation. Part of your financial plan, a big piece of that pie, is your tax planning. So directly correlating or communicating with the financial advisor who would also deal with a portfolio that's within a retirement account is very important. But regarding from a tax standpoint, I have many small businesses who are doing very well. And sometimes we unfortunately have this conversation after I prepare the tax return, and they say, why do I owe so much? I say, well, you're doing very well, and I don't want you to spend money just for the mere fact you want to save 40 cents on the dollar. It just doesn't make sense. Why don't you start investing in yourself? What happens if for a sole 100% owner, something happens to them? What value comes out of all that hard work? You spent much time and you got this service business.
Right.
What kind of value comes out of that service if you have a spouse or kids and out of that business?
I mean, if you die,
correct,
or you're disabled,
absolutely.
Does the business stop?
How do you protect yourself? A service business, you're not just going to get a check. The business will probably just go away, and you're missing out on an opportunity. While you are being successful, take those additional funds, set up some sort of retirement plan. Number one, it's a tax deduction, so obviously from a tax perspective, it's a good thing. And like you said, Pete, the flexibility of those payments could happen after year end. It's one of the few things the year's over, and you still can get a tax.
You can still
correct. And I get many calls. Of course, there's a calculation you have to figure out in order to know how much to contribute. But we usually prepare the return.
There are limits on some of them.
There are top limits, and then there's certain calculations, and we usually do that calculation when we do the tax return. So we can actually do a scenario while preparing their tax return. This is what it looks like with the contribution into your retirement plan. This is what it looks like. So it actually allows us to do tax planning even after the end of the year, which is a wonderful flexible area.
Okay.
But you talk about amounts of money depending on how well the business owner is doing. You talk about a SEP. You can put away up to, I believe, $53,000 to $59,000. I never remember at the top of my head. I always refer to my experts on that. And
and it changes every year too.
It changes every year. Yeah, then a popular one's a 401k, even for a small business. Right. You as an individual.
And that's a lower amount, isn't it?
Actually, it depends. Now, the 401k, you can put up to $18,000, defer $18,000 into it if you're under 50. If you're over 50, it's up to $24,000. Okay. But on top of that, some people will get a profit sharing plan on top of it. And the combination of the 401k profit sharing can get up to the $53,000, $59,000. And then you can do a cash balance plan. You can write a 6-digit check into your retirement account. That's tax deductible, but there's costs. You got to involve a third-party administrator. It takes a little more
to get it set up.
Make sure all your ducks are in a row.
Okay.
So there are ways you can write checks to yourself, get a tax deduction now, and obviously build a portfolio that you have this money sitting here. So if anything happens to you, at least you invested in yourself from all the hard work you did from the business. Of course, at the end of the day, when you pull the money out, it is taxable as well. But at that time, that's when you do additional tax planning, and that's where a financial advisor comes in well, because you pull that money out. How do you set up that plan? Well, that's a whole nother area of personal financial growth.
Right.
Absolutely.
Right. So there are a lot of different avenues. It's just something that you should be thinking about now, near the end of October, because you've got several months, really, to be able to have to fund it, but you can start planning now for next year. And it'd be nice if you set aside and we do this with our clients, is just suggest, hey, every month you should be setting some money aside.
Absolutely.
So that it makes this conversation pretty easy. It's just what vehicle and how much, and I should be setting aside money every month.
And speaking of setting aside money, you should do the same thing for tax. Anybody who has a business should be keeping up with their financials on a quarterly basis. And let's say you have a great first quarter and a great second quarter.
Okay.
Well, let's plan on whatever profits there are in the first quarter. Set aside the money for taxes at that time.
Well, absolutely. Because, and how do they do that themselves if they don't have a CPA that's picking the numbers for them?
You can be very conservative and use a 40%. What's the profits? Take 40%, put it aside.
Okay.
If the second quarter you show a big loss, okay, just don't do anything. Just keep it the third quarter. But the problem is,
but at least you have it, right?
Correct. And I've seen it happen where people had a stellar first 6 months, and then
you have a terrible quarter.
Then the terrible quarter, and by the time it's time to pay their taxes, the money's gone.
Right.
And so it's a discipline that you have to come up with. On a quarterly basis, you're putting away money, even if you're not writing a check in. Keep that money aside, because the rest of the year might not be producing the money you need to pay the taxes that you're going to pay for next year.
Right. So that's a blocking and tackling type thing.
That's right.
Setting aside, accruing for taxes as you go is really smart, and you need to do that.
Absolutely. Okay. No one likes that April surprise,
and
I don't like it either.
Or October surprise.
Or October surprise. That's right.
So. The other thing is, in thinking about that, is that you need to pay yourself first too. So the savings is really, it's a foundational kind of thing that you need to every month, or if you get paid twice a month, you need to set aside some money every month or every pay period for your long-term retirement, because you are going to stop working one day.
Exactly.
Or if you want to give it away, that's fine too. What you do with it is up to you.
Yeah.
However,
and you want to pay yourself, or set some money aside to pay yourself. And if you can't pay yourself, put some money aside, put a loan on the books that the company owes you that money. Get in that discipline for a number of reasons. Number one, you're working, you're running a business, you should be getting paid for it. You need to survive.
It's funny you bring that up, because in one of the foundational things that we have as well, that all the businesses we've seen over the last 13 years, it really helps folks if they haven't started paying themselves a regular paycheck. It does transform your thinking. Once you start paying that regular paycheck, you have to make that every month, and you will do what you need to do to make sure that you can hit payroll. And having that payroll sword over your head actually helps you to be disciplined.
It's a great motivator. And another benefit is when you're looking to sell the business.
If you paid yourself a regular salary for years and you can show it.
If an investor comes in and they want to put someone's going to have to take your position if you're going to leave.
That's right.
And if they're going to budget the financials to see what the value of your business is. They want to see what your salary is because someone is going to come in and they are going to pay them a salary.
Right.
So it actually helps the person who's looking to buy your business, gives them better feedback.
Yeah, and what we'd suggest, at least I'd suggest, is that if you're thinking about, well, how much do I save? Well, it should be 15 to 20% of your income. Mm-hmm. If you can't do that, we'll do 10.
Right.
But don't do less than 10.
Right.
And it needs to be somewhere between 10 and 20. I tell my kids, closer to 20, the better.
Yeah.
When you get out of college and you start earning some money, hit it hard. The first 5-10 years you're out. And if you don't save the last 5 or 10 years you're working, you're going to have a whole lot more than people who did it reverse.
That's right.
So if you save early when you're young, it'll be there when you need it.
To learn more about today's topic, call 614-306-7922. Now, back to more business talk.
So I'm talking today with Tim Cistone from Bottom Line Accounting in Dublin, Ohio. And he has been helping business owners for a long time and has been helped us for many years and does a great job with our taxes and making sure that we're doing what we need to do to make the business grow. So we've been talking about a variety of different things. So talked about tax reform a little bit, about purchasing equipment and vehicles and those kind of things. And that this is a good time to be thinking about those kind of things. Also about retirement plans. But what was the last thing we really want to talk about? This is our last segment. And
I've been in this profession long enough to realize, just like any other profession, it's evolving.
Of course, yes.
and you brought up an article earlier before we were on the air there, Pete, about technology, artificial intelligence.
Oh, yeah.
I think.
The title says "Firms Leaving the Bean Counting to the Robots,"
and that is true.
And they're talking about some of the they call them, not to be disrespectful to anybody with a finance or accounting degree, some of the finance department tasks at this company. This is Nokia and Royal Dutch Shell and Orange SA. 2/3 of large global companies expect to automate some or most of their finance department tasks over the next 2 to 3 years.
2 to 3.
Just plain automate them. I mean, that's fast. That is lightning fast.
And that's it. It's not that the technology is amazing. It's how fast it's coming at us. I'm knock on wood, I hope to be in this profession for at least another 10, 20 years. Yeah. And I do see some drastic changes. For instance, the automation of preparing the tax return is getting to the point where you can scan your information through and it's automatically entered in.
Right.
You don't even need a human being before to even do the tax return. So how do you pivot? How do you evolve? And
right.
We've been realizing that every CPA has access to some valuable information of small businesses, the most sensitive financial information. So we should help them interpret the information, number one. Number two, how do we monitor and advise on it? And helping more so from a compliance standpoint, making sure your taxes are done, since now that's being done by robots.
Right.
Well,
you can't call your robot.
Yeah. To do a service where robots aren't going to be as helpful as consulting, working with the small business owner, being that there's external CFO, if you will, helping them make some business decisions through the year. Yeah. And one important thing to look at outside of tax planning and profits is what's the value of your business. I've been reading up on a few very intelligent people who've bought and sold businesses.
Okay.
One specifically, John Warrillow, wrote a book called Built to Sell.
Built to Sell.
Built to Sell. It's a very easy read. Basically, it's a story about a gentleman who had his own business, wants to get out of it, and wants to sell. Well, he came across his friend of his who was very knowledgeable in the industry. And he says, your business is worth nothing. You have nothing to sell. So the story basically goes from a gentleman who has a worthless business to down the line doing things to make his business profitable.
Great.
And to make it valuable. And at the end,
So it really is an asset, not a job.
Correct.
Some people own a job.
And exactly. And there's a line in there. When you own a business, you don't sell a product. You don't sell the operations. You're selling your business.
Yeah.
You want something at the end. You want to build a nice product. How you package that and sell it to somebody who's interested in your business is one thing. There's certain tips in there. Number one, you need to separate yourself specifically from that business. It doesn't make sense to buy a business when the person who makes the business work is leaving. It makes no value.
Right.
So how do you make the business work
if you're in
without
charge
you?
of finance and HR and sales and marketing and operations and the warehouse,
you're buying nothing unless you're buying the person, and that person wants, if you want to leave, then that's not a good setup.
Right.
So you need to figure a way to make your business work without you. And obviously, there's many ways. Obviously,
that's one
training.
of the things we ask our clients early on is, well, if you went to Florida for a month and you didn't have a phone or a computer, how would your business do without you? And they usually they go, oh, not too well.
And that's a great indicator that maybe they should start. If they want an asset in the end, that's sellable. Of course, it all involves around people. I would say not all, but a majority. You got to have good people, and you got to have a vision, a business plan that everybody subscribes to. Right. Everyone has to be on the same page. Right. I'm just as guilty as I get involved in my day-to-day and make sure everything gets done where the big picture sometimes gets missed. Right. So that is something that anybody who's owning the business that hopefully will get something out of the business when they're done, when they want to hang up their that there's something there that they can leave with. Right. And more importantly, pass on the legacy. Just having the being proud to start something that becomes
that will survive without you.
That will survive without you. That will help people. Maybe produce a product that's going to help people, employ people, and just something you started. It's something that would feel good.
So it's one of the reasons that we promote the 90-day planning concept, and then also annually getting out of the business for a day or so to take a look at, well, where are we headed? What people are we going to need to develop? What people are we going to need to hire? Some of the higher level things you may not do at a 90-day planning session, but think about strategically, where are we going to be in 3 or 4 years?
Sure.
And make sure you think about it ahead of time because it happens so fast.
Absolutely. And reaching out to professional help is a great step towards making sure you're on the right path to be where you're at. And there's never a bad time to get started on succession planning. If you want to sell in 20, it takes a long time.
Our advice to folks is you need to start 10 years ahead.
Yeah.
I mean, that'd be ideal.
Right.
Now, it doesn't mean you can't do it in 8. You can, but it's a lot more comfortable if you actually do it 10 years ahead.
I agree.
From a finance standpoint, just the mechanics of it and training and developing people, that's another whole aspect of it.
You figure probably 2 of those 10 years you're going through the process of finding people. Just the selling process is especially depending on the size of the business. Right. Because first of all,
it doesn't happen in 3 months.
No, it does not. Not something that this because it's very complex. It's not just you're not selling a building. You're selling something that's more involved. Something you cannot touch, like goodwill. I mean, how do you measure goodwill? Right. And I always think it's all up to the person who is evaluating you and thinking, okay, well, this business has all these assets, but what's the true value of that name of that business? What is their, what are their customers thinking?
Your emotional attachment to it isn't going to be valued the same as you value it.
Nope. Sometimes you have to step back and resort to professional help to get you on the right path in order to make it.
So you mentioned separating yourself, making sure that the business can be specific things within the business can be done without you being there every day, and then having a good, clear vision. What's another tip from this book, Built to Sell?
Let's see here. Those were the 2 I took away from, but there's a few of them. Oh, geez, you put me on the spot.
No, that's good though. I mean, and a gentleman. What's the author's name again?
John Warrillow. He's I want to say he's from Canada because a lot of the conversations. He has a podcast and a website, and basically he talks with small business owners about the value of their business and actually people who have sold their business. Right. It's a great resource to see other people who have sold their business and what they went through because no one understands the process
until you go through it. It's one of those kind of things.
And I've gone through an acquisition myself, and I'm glad I went through it just because of the experience and the knowledge.
When a business owner is talking to you, you understand.
It absolutely. It creates a value for me to pass on to my clients who are interested. And you just don't get that feel until you actually go through it. And boy, it's a lot of work.
Okay.
But again, if you have the right people around you, of course, if you're looking to sell, you might want to look out there, see if there's any brokers out there who do nothing but matching you up with the appropriate buyer. Right. Just because you want to sell doesn't mean people are going to just come up to you, and you're going to have the appropriate seller or buyer. And if someone wants to buy, you might not feel they're the right fit. Mm-hmm. You're going to be very
You're going to
particular.
interview them as well.
Correct.
Right?
This is your baby.
Generally, you get attached to your employees, and you want them to be
you want
able
to take care of your employees. Absolutely. And if you see someone coming in who's looking to change the dynamic, and maybe you might want to be a little more particular, and that's where you're going to rely on the business broker to say, this is what I want. If you bring this,
here's the characteristics of the ideal buyer. And
that's correct. Okay. And then, of course, you're going to involve an attorney for the purchase agreement. And it's a long process.
Okay.
And then, of course, you're going to have to deal with a lot of compliance. They're going to bring their accountants in to look through and scrutinize every little financial thing. Because
look at your tax returns.
What would you do if you bought a business? You're going to look at every little detail before you write that big check. So just be prepared for something like that.
Okay.
So it is a long process. But if you get the standards in place, business works without you. And again, working with someone who's going to take you help you develop a business that will be valuable one day. You just need to make sure you think about it soon enough, and not realize just because you want to get out of the industry, you're going to sell your business, and you think you're going to get something out of it.
So overall, 8 to 10 years. If
very reasonable.
Give yourself that amount of time, if it's possible, to build it to sell.
Sure.
Read this book, Built to Sell, by John Warlow. Or Warlow.
That's free plug, by the way.
Okay, good. The other book that I should have mentioned earlier is The Richest Man in Babylon, and I've had my kids read that. It's a story. It's just a real small book, but it's a classic book about saving, and about earning and saving and paying yourself first, and some disciplines that if you apply early in your career, you'll be very wealthy in 20 years or 30 years. So that's a
great
really good one.
And another good book, The E-Myth by
the
Gerber.
E-Myth. Yeah, their E-Myth Revisited is the one we plug. Yeah, it's very good.
And I have to say, Built to Sell probably was written, I believe John Warlow is a fan of, was it Richard Gerber? Is that his name?
Michael Gerber.
Michael Gerber, sorry.
Michael Gerber, yeah.
Michael Gerber, and those E-Myth books, those are, if you're a small business owner and want to know how to run an efficient business, start with those E-Myths. And the good thing about the E-Myth, too, they even focus it down to specific professions. So there's an E-Myth from an accounting firm, which is written by Darren Clark. I can't believe I forgot his name. But so if you want to run an efficient accounting firm, I think they have one for a law firm. Okay. But great reads if you're looking to run a business and know how to run a successful business. And one of his key messages is run a business that can run without you, and you can have that lifestyle that you've always wanted.
Right. And you can be involved in the business, the things that you enjoy and that you're very good at and you like to do. Because you're the business owner, you should be able to do that, right?
Have that
do the things that you like.
Absolutely. Have that dream work-life balance. It's possible. It takes work, but it's possible. And again, I would recommend that E-Myth and Built to Sell is a good start. And then
Tim, how would you recommend people to contact you if they need a great CPA?
Sure. You can go to bottomlinecpa.com and reach out to us through there. And again, we deal with a lot of small businesses and individual taxes and any questions you have, please reach out to us. So we're always willing to help. Bottomlinecpa.com.
Very simple. Thank you.
Thanks for having me, Pete.
This has been Business Talk, your business, your success. Sponsored by Take Action Business Coaching. The opinions expressed were those of the participants and may not be the views of the staff, advertisers, and owners of the station. Advice given was not intended to replace that of your business advisor. For more information about the topics discussed today, call 614-306-7922. 614-306-7922. Tune in next week at this time for more Business Talk, your business, your success.